Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We are here with Danny of Capital Cosm. Danny, thank you for coming back on the show.
Hey, Steve. Thanks for having me on again.
Yes, always a pleasure here. Let's start out like we always do. And what is your macro view of the world economy and financial markets?
Yeah, so it seems like we've kind of diverged away from a clearly building trend up until about a month ago. It seems like the election result kind of put everything into a tailspin on the positive side, right? The market's rallying to new all-time highs. Crypto's taken off. Bitcoin is exploding, closing in on that $100,000 price tag. And gold and silver both have kind of hit the brakes, so to speak. So one can't uh, begin to wonder is a Trump win effectively the end of this commodities bull market? Is it bullish tech and AI all the way for the next at least 4 years or so? So I think there's a lot of sentiment. There's a lot of positive sentiment out there, given the deregulationary nature of a coming Trump administration, and I think that's what's playing out now. There's probably a little too much over exuberance, but I don't think this really spells the end. Obviously, for the gold trade, obviously, BRICS is still going to put their pedal to the metal when it comes to buying gold. Eastern central banks are going to continue buying gold. None of what's occurred after the election, I think, is going to have any lasting impact. On a longer time frame, let's call it.
Okay, all right. So there might have been a quick knee-jerk reaction to having a sweeping of Team Red, but you don't see this as having any long-lasting impact.
Um, it will have some impact, but in terms of the gold and silver thesis, the precious metals thesis is pretty much firmly entrenched in the geopolitics. BRICS is continually going to grow. They're not going to rewind the tape now that Trump's in, especially because the way these countries out there at the helm of BRICS look at things, Russia, China, these are all countries that have 10, 15, 20, 25, 100-year plans, whereas we operate in 4-year increments. So the fact that they would halt whatever they're doing in their multi-decade plans just because of a 4-year election, I don't think that's going to be the case. For that reason, I think the gold and silver thesis, it may have hit a bit of a speed bump momentarily, but I think when you look at things over the next 4 years, towards the end of the Trump presidency, you will see a much higher gold price, as well as a silver price than you do see today. Then, as it relates to the other commodities out there, well, listen, we may be able to let the market breathe a little bit more when it comes to these deregulation aspects of what Trump wants to do. But that doesn't change the fact that you're still going to want to build out all of these new AI data centers. You're still the third world, seemingly the third world, still wants to industrialize, and so the demand is still going to be strong. And so the question is, did this really hamper? Did this kind of bring down a little bit of the potential energy that was built up in the commodity space? It may have, but I still think there's still a lot of meat on the table, when it comes to the commodity space, the energy space, natural resources in general, which is what your channel covers, obviously.
Okay, so regarding the BRICS, you don't think that Trump's tweet threatening them on Twitter, saying that if they don't use the dollar or else, you don't think that's going to have any lasting effect?
I mean, it'll have obviously, if the president tweets something like that to you, it might cause a room for pause. But I mean, how is he? What's going to stop Russia from trading oil with India in rubles? I mean, they've already got the system down pat. What's going to? I don't think that's really going to stop a lot of these countries to in changing what they've already done and established. The 100% tariffs thing. Yeah, I mean, they may get priced out of the market here in America, but again, I mean, who pays for the tariffs? It's the consumer.
It'll end
And
up being us, yeah.
it'll end up being us. So yeah, there might be diminished demand from whatever goods and services that they bring over here, whatever goods and services China and India bring over here, if they do decide to continue trading in outside of the dollar with 100% tariff, yes, the consumer here will end up paying the brunt of it. But that also indicates that demand here would also be cut down as well, right? Because the price went up, so you may not buy as much. I don't know, rugs from Turkey, silk rugs from Turkey or something as you would have normally because they're twice the cost now, effectively, and things to that effect. So they may start seeing some of the effects that way, but I think with a lot of these countries, they have much longer time horizons than we do. And even if it means just withstanding 4 years of Trump and the Trump tariff regime, that's the modus operandi. Um, it again, they don't operate in 4 year time horizons like we do. And so, Trump may have a tariff regime, but who knows who the next president will be? And then those policies might get reversed. And there may be, and those they could easily get reversed, especially if once the consumer starts eating the cost, there could be entire platforms based around undoing the tariffs because it's what because something similar is what undeniably undid Biden or the Democrats in general. It's the inflation. It's the economy stupid. And so, come 2026 and then 2028, yeah, yeah, things are going to be different, especially if these tariffs go into play and prices remain, elevated due to the tariffs. There could be demands to relinquish them. And then a politician from the other side comes in and says, I will do such that. And then BRICS is back in business. So, and plus, don't forget, BRICS essentially went MIA during the Trump term. They came into fruition during the Obama years, and you really didn't hear much of them for about 4 or 5 years up until the Ukraine war. And that was really because they didn't really have a raison d'etre, a reason for being up until then. It was only after the Ukraine war and the crippling sanctions on Russia that the rest of the world looked at themselves and said, we need an alternative. So as easily as they were able to pivot back then, they can pivot again in the future.
Yeah. Okay. You interview a lot of top-notch guests. What are some recurring themes that you're hearing? If you could kind of summarize some of the big lessons that you've got from them, what would you say?
Yeah. Recurring themes. I mean, leading up to the election, I had a number. Most of my guests were pretty much expecting calamity when it comes to market prices, a correction, a crash, etc. It seems that has changed course. I'm seeing a lot of my guests nowadays kind of pretty much put out the same kind of analysis that what we're seeing now is a rush of exuberance in the market due to the election win. And you can kind of see this in what's happening in terms of the crypto market, the altcoin market's rallying. You have a lot of small cap tech stocks rallying now, which means it's telling you that risk is on. But the key tell is that people like Warren Buffett, the real smart money out there, they're hoarding cash. Warren Buffett is at a record level of 30% allocation to cash. He's never had that much cash allocated in his portfolio. Now, to us, it might not seem like a lot, 30%. But to him, to be able to sell Apple and a lot of his other darlings that he's held on to for decades, that is extremely telling. And so if the retail space is going out and buying all of these risky assets, while the likes of Buffett is in historically high cash positions, that's telling in and of itself. So to sum up your question, the answer to your question, most of my guests are kind of leaning towards a delay of what you could call the inevitable. With a Trump win, it's kind of effectively pushed back the window a bit. So as opposed to a large correction or crash that you may have seen with Kamala win, now that window's been kind of moved out. sometime in the 2025, early to mid 2025 is what I'm hearing lately. So that's where that's what a lot of my guests have been talking about.
Okay. Yeah, I suppose I'm kind of hearing basically the same thing. One thing I really like about you come from a software background, so you're a tech guy, and
Yeah, data science and analytics.
yes, and you kind of get into the Google Trends and what are people searching for? What are you finding in recent trend searches and stuff?
Yeah, I mean, we can go ahead and look at some if you want.
Yeah.
So here I've pulled up, let me pull it up really quick. So here I pulled up search query results, and this is just basic Google Trends data. Anyone can go ahead and do. But if you look at gold price search queries versus Bitcoin price search queries, you've got gold here in blue, Bitcoin here in red, and despite the recent rally up in Bitcoin, it's still lagging a little behind the gold price.
Hmm.
So even though we've seen this kind of pause in the gold rally and this huge Bitcoin pump, when you look at this thing from a 20-year time horizon, gold is still the master. Gold is still the king. But obviously, one can make the case that Bitcoin has taken some of gold's shine in the process. And, maybe some of that demand that goes into Bitcoin would have went into gold otherwise. It's very interesting to look at some of the geographical locations where Bitcoin and gold both see some interest. So in red, you've got countries where Bitcoin price is a higher search query item. In blue, you have the gold price. And what you'll notice is Bitcoin is primarily being searched out by members of the West, right? Yes, Canada, Australia, you got some European countries up here. And then the gold price is primarily being searched out by the global South,
Interesting.
India, the Middle East, North Africa. You've got Japan here as well.
Yeah.
So it kind of tells you we live in different worlds when it comes to how we value money. Especially because
Now,
like the BRICS countries, you could say, are not interested in Bitcoin insofar as the Western countries are,
yeah.
and vice versa. And so, yeah, I mean, this is very telling.
Very. What country is that in Western Europe? There is that Spain, France, like kind of that region?
I think that's Spain. Yeah, Spain.
Okay.
So if you look at the top, yeah, so the top countries, the top search gold query countries, Burma, Qatar, Kuwait, Oman, and Bangladesh, right? The Middle East, essentially the Middle East and Southeast Asia. When you look at the Bitcoin highest search countries, you're looking again, Europe. You got Nigeria in there, interestingly enough,
Yeah.
Israel, and then the United States. So essentially, primarily your Western countries.
So I guess we're pretty radical contrarians here if we're more bullish on gold than we are on Bitcoin.
Yeah, yeah. I mean, living in America, maybe if you're broadcasting out of India or something, you would be the contrarian to be a Bitcoin bull.
Yeah, yeah. Interesting. Do you have any other trends that are catching your eye?
Yeah, one second. So, uranium stocks. I think this is very interesting. People are very down on uranium. But when you look at uranium over the years, I mean, the sentiment in uranium is down tremendously over, compared to where it was in 2007, at the highs there,
Yeah.
especially versus today. And then keep in mind that access to the internet is a lot more prominent today than it is back in 2007.
Oh, that's a very good point. Yeah, we're still dealing with dial-up and stuff.
Yeah, so the fact that you're about 17% of the total traffic that you were seeing in the peak of the last uranium bull market today versus '07, back when we were still dealing with dial-up, like much to your point. I think it's very interesting. It's a very contrarian view of looking at it. Even when you look at the last big spike in uranium equities in 2021, we're about where that was indexed at 55. Today we're at index at 17.
Oh, perfect.
And then I want to show you something here as well. This is the put to call ratio for URA. And basically, when this red line goes up, that means that there's way more puts versus calls,
Okay.
and then vice versa. So when you see this red line going straight up, your potential for going up in price increases, right? Because if there's way more puts already priced into the markets, you've got more potential to go up. Because you've spent a lot of that energy already being brought down by the puts, and vice versa. What you'll notice is that the put to call ratio right now, this is another way to track sentiment that I use as well. The put to call ratio right now for URA, the uranium ETF, is it's not extremely low, but it is low. So that tells me that there's slightly more calls versus puts, and so there may be some potential energy to come back down here a little bit. There's probably more of a chance that we see a little bit of a short-term drop when it comes to our overall uranium equities here. And then this is another chart that I showed your audience last time, and it is the institutional ownership of URA. And so basically you've got the URA price here, and then you've got the volume of institutional ownership for URA. So essentially, each bar represents volume of smart money ownership, family offices, hedge funds, the works. And so what's interesting is that as the price went up, so did the institutional ownership. And so you've got to ask yourself the question: if the price was going up, who was buying? It seems that a huge driver of the recent price spike from June of 2023 all the way up until the summer of this past year was primarily being driven by institutional ownership.
Yeah.
And if institutional ownership if it's a primary driver, then retail isn't involved. And I don't know how much time you spend on Twitter, but you can clearly see this on Twitter. Retail is hating the uranium trade right now. And even now, I mean, you look at the price now, it's pretty much sideways over the last 6 months or so.
Yeah.
But the amount of institutional ownership continues to increase. So the smart money is buying into uranium. The retail money is tapping out. So they're selling their uranium stocks to these hedge funds, to these family offices. And so I think there's short term, there may be a little bit of there may be some turbulence with the uranium trade. But I mean, overall, people who are in the know, people who handle millions, if not billions of dollars, they're still piling into the uranium trade.
Yeah.
Unbeknownst to UTWIT and the rest out there. And I mean, and you and I both know this. I mean, being a content creator is a very good way of discerning sentiment and trends. So we see it in our views. 2 years ago, when I first started doing this YouTube stuff, I would make gold videos on gold, silver, copper, all of which would not really get the traction that I was hoping for. And then I may start making uranium videos. This is back in, I want to say, late 2022, early 2023. The uranium videos always took off the most out of all the other videos. And that was because you were still in this very highly positively sentiment environment with uranium. Nowadays, it's the inverse. Gold videos on gold, videos on silver. I'm taking you behind the curtain now, for your audience. Those do way better than uranium videos. So that's another sign of sentiment out there, is looking at these YouTube channels and seeing what drives their views. Uranium doesn't drive as many views as it used to, and that tells you that retail is pretty much disinterested at the moment. And I mean, this could be when things like this happen, I mean, you've got to look at them as opportunities. And you can't just use one metric and call it a day. As my good friend Kevin Wadsworth of North Star Bat Charts like say, it's a confluence of evidence you've got to look at. You've got to look at multiple data points, and if things are if the scale is tipped one way, then that's a strong sign that there's there's a very high signal to noise ratio on that end.
Yeah, I was joking with Rick Rule and Justin Hune about that if you did nothing else and just look at the amount of views that we got when talking about uranium, that would be a pretty good indicator of when to buy and when to sell. The fewer the views, that's a buy signal, and the more views, that's a sell signal. And I actually tracked it. I should probably do a show on that and track the views. And it was surprisingly accurate, within a week or two.
Yeah. Yeah. I mean, I can tell you from my own channel, the uranium videos today don't draw. Well, I'm a bigger channel today than I was back then, obviously, but they haven't scaled proportionally to the size of my channel in the way that you would expect, right? That that like the gold and silver videos have. The gold and silver videos, any the gold and silver related videos that I post, and I've seen other people post as well, including your channel, those tend to do a lot better than the uranium stuff, I've noticed. So that's again, that's a telltale sign that could you be at a bottom in terms of sentiment.
Yeah.
It's really hard to tell, but we're definitely not at a top.
Very true. Very true. Okay, what commodities do you see that have the brightest potential for 2025?
2025. I mean, pretty much the entire complex is pretty beaten down. But if I had to pick one as an asymmetric play, I mean, it's got to be natural gas. Again, I think that's what I said last time on your show as well.
Yeah.
But it remains pretty beaten down. But if you're going to have this, AI play, you're going to have to get the energy from somewhere. And there is this talk about this energy transition. I think that's largely been neutralized. COP, the last big COP, I think they called it COP 28 or something. They've all come to terms with nuclear power as an energy source, which is a huge U-turn from a couple of years back, where nuclear was verboten and all of this stuff. Eventually, they will come to terms with natural gas and perhaps even coal. Coal might be a harder sell, which makes it a little bit more asymmetric, I would say. But I think natural gas is, given where it's at now, versus where it was a couple of years ago, and we've never had it. Here's another thing: we've never had an energy transition in history. You go look at energy consumption over time by all the different sources of energy. We've just stacked energy on top of each other. Okay. So there's never been a time where we just say, okay, we're going to stop using wood now because we've discovered how to extract energy from hydrocarbons. No, we're actually using more wood to extract energy out of than we have at any other point in history. So there's no precedence for an energy transition. We're just going to use more of a certain type of energy than we had before, but it's not like we're just scrap all the other ones, the lower dense versions, off the table. So I think, yeah, natural gas. And I still like the oil services as well. They still haven't really they've taken off in silence, and they've corrected quite a bit over the last year or so. And yeah, I still see a lot of risk out there when it comes to the geopolitics. You had the Middle East almost go ablaze over the last several months, and the oil price rose like what, $2. So there's definitely there's definitely some interesting arbitrage to play there.
So natural gas, like what are some of your favorite natural gas plays?
I like Antero. Antero, I think that's my favorite.
Okay.
So in the last big natural gas run, if you look at, I think that was probably the best performing natural gas stock that I know of. And so I usually stick with the plays that run while the commodity runs. So if the commodity is in a bull market and you have a producer that's not at the very minimum, it should keep up with the commodity to, at the very bare minimum. Um, Ideally, it should outpace the commodity to make up for the risk you have to take in owning the stock versus the actual commodity. So Antero actually outperformed uh, the basket of natural gas stocks that I had at the time. This is this is all the way back in 2020, crescendoing back in all the way up to 2022, when we started to see the big natural gas spike during the Ukraine war. And so I'm still very bullish on Antero. And if you look at, and this is ticker symbol AR, if you look at the correction that we've seen in nat gas, Antero has actually outperformed that. So meaning that it did go down, but it didn't go down as badly as number one, the natural gas price, which has seen like a 70-80% haircut. And then number two, the rest of the nat gas plays.
Okay, I'm gonna share my screen here real quick, and we can take a look at it. So here's Antero, and then I guess I could overlay it with natural gas.
And you have to forgive me, by the way. I'm still I'm coming off of a cold, so if I
you're good.
a bit winded.
Okay, so the pink is natural gas here, and then the bar chart is Antero, and so you like this one?
Yeah. I mean, obviously you can see the big delta there. The pink line, which is nat gas futures, has gone down by a significant margin since the peak there. But Antero's actually held up fairly well.
Yeah, it hasn't had near the drawdown that has. Okay.
Yeah, you could pull up a whole basket of these things. I think another one was CNX, RRC. You can kind of compare them all, and AR outperforms each and every one of them.
Range Resources, is that it?
Yep. Mm-hmm.
Okay. Yeah, that didn't have near the drawdown that this one did. Okay, cool. And what do you like for oil services?
Tidewater. I've had Tidewater for a while now.
Okay.
So I'm they have had a bit of a correction, and so hey, it's buying time.
Okay. It means it's on sale.
Yeah.
Awesome. Okay. Looking back at past economic cycles. So, like, what lessons from past economic cycles do you see applying most directly to today? Are there any patterns that you see from the past that we might be able to put into where we are now in history?
Yeah. Well, I think as an investor, I think the lesson to be learned is to be patient. These ups and downs, in history, they're just blips. And so, yeah, we are in a little bit of a pause when it comes to the gold price, silver price. It's moving sideways. But in history, you look at the last 10 to 20 years of the gold market, it's gone up precipitously, and then it's moved sideways for months to a year. In the case of 2020, it was 4 years. But gold is one of those assets. It's top left to bottom right, or bottom left to top right. Sorry, still sick. And I mean, that's one of the big takeaways, is to always be long-term focused and be able to zoom out on when you're looking at the charts. And I think that's where people get caught up, especially, when you're obsessed with this stuff, when you're really interested in this stuff, you've got to consume some information. You've got to do something, but it actually behooves you. Sometimes investing is like touching a bar. It's like touching a bar of soap. Your portfolio is. The more you touch it, the smaller the bar of soap becomes. And so sometimes it's one thing to be unproductive. It's another thing to be counterproductive.
Yeah.
Right. So most people think, oh, if I'm not doing something, I'm being unproductive. If I'm doing nothing, I'm being unproductive. I'm not buying, I'm not selling, I'm being unproductive. Well, in some cases, if you try to get too cute with your investments, then you run the risk of being counterproductive, which means you may come out even worse had you done nothing in its place.
Patience. Sometimes the best thing to do is nothing.
Which is really hard nowadays. I mean, you look at the average holding time of a stock in today's cohort of traders, it's like 6 months.
Wow.
50 years ago, guess what it was?
I don't know.
It was like 2 to 3 years.
Okay. Yeah. Now it's 10% of that.
Obviously, we have this nowadays, right? Yeah, you have our phones, and it's a lot easier to trade and buy and sell today than it was back then. But I mean, that's how you get an edge. Is you try to sidestep a lot of this busybodiness you see in investing nowadays.
Yeah. They may say that the trades are free, but if you read the fine print, they're taking their cut. They're not, interactive brokers and doing this out of the goodness of their heart. So every time you trade these things, you got to pay the house. Good point. Okay. Recession signals, with historical patterns of yield curve inversions leading into recessions. Where do you think we stand today? How would you advise preparing for any potential down?
Yeah, so if you look at delinquencies, for example, you'll notice that delinquencies over the last year have just spiked. So if you were to look at a delinquencies chart this time last year, you would make conclusion, oh, we're in no danger of a recession, or like delinquencies were at record lows. You look at a delinquencies chart now, I mean, it is at highs not seen since, I think, 08 or sometime in that time frame. And then you look at excess savings. That's also come down. So I think the signs are all there, as well as my good friend Patrick Kareem. I think you may have had him on your show, or if not, you should.
Yeah, North Star. Yeah.
You should. Yeah. So he ran a little experiment with ChatGPT, and he basically asked it to give me give me each and every recession over the last, I don't know, X number of years, and give me the actual start and end date, and then the reported start and end date. You know what he found?
Way later.
Yeah, over the majority of these recessions, they were called after they actually even ended, not even started. So by the time the recession actually ended, that's when the Fed calls it a recession. So my point is, we could already be in one right now. So it's if you're just going to wait for the government to tell you you're in a recession, you're going to be behind the curve. I mean, that's always been the case. So to answer your question, I think there's a good chance we already are in a recession, and the markets are one thing, the economy is another thing. Obviously, there's crossover between the two, but they're not entirely the same.
So I was right last year when I called for the 2023 recession. Is kind of what you're saying.
Hey, I mean, you may be right. You looking back down at it. Check back with me in like a few years. It's might be
confirmation from Jerome Powell.
Yeah, and then you could clip that part of your video from last year and say, "Aha, I was right."
Gotcha. I can see straight looking backwards. Okay. Let's see. Okay, so for 2025, you like nat gas a lot. Any particular regions, industries that you are pretty excited about over, let's say, the next 5 to 10 years?
Regions. I think Argentina, even though it's run up quite a bit lately over the last year. I don't know if you've looked at Argentina. I don't know if you've looked at that section of the world, but you
really no.
Yeah, so I can actually pull it up for you. It's
yeah, please.
Yeah, 1 second.
Yeah, I'm excited about what Javier Milei has done down there. I mean, I almost kind of think that's what we need.
And I think that's what's most likely going to happen. So this is ARGT. Let me know, is my screen coming off clear? Because
it looks a little grainy.
Huh. 1 second. What if I move it here? Can you still see it?
I can see it, yeah.
Can you see the chart
I can see the chart. Yeah. Oh, there we go. That's a lot clearer.
better?
I should have said something 20 minutes ago. All right, there we go.
Yeah. So this is ARGT. This is essentially an Argentinian or Argentine ETF.
Okay.
And yeah, I mean, just look at this recent move from 2022.
Yeah,
When did Millet come in? Wasn't it 2023?
I think so. Yeah, I don't know the exact time, but
No,
yeah, it's been a little over a year, I think.
yeah. Well, it's gone up. It's gone up quite a bit. If you would have bought in back in the dips of 2020,
Yeah.
it's up. Almost 5.5x, 447%. And then if you compare it with our stock market, the S&P,
Yeah. Outperform.
actually outperformed the S&P depending on when you want to start.
Yeah.
If you want to start back in 2020 where we had the big reset in the market, it's outperforming by quite a bit.
Yeah. Now, so this one's probably unlikely to be sanctioned by maybe I'm a little biased because I had a Russian ETF like this, and my own government took it from me, and so I don't know where it went. Probably to the Russian oligarchs.
Well, if
probably
for some sort of deal with Ukraine, then you might be able to get the position back.
That would be nice. Got a lot of Gazprom tied up too. That apparently just went to shareholder.
I took out a few $1,000 and at the very start of that war, when that entire market was crashing, the Russian market has dumped a lot more money into some of those oil and gas stocks in Russia, and they've been locked in for since 2022. So if some sort of deal is brokered and unsanctioning the markets is part of that deal, then you and I and probably a lot of your listeners will benefit from seeing your money back.
That would be nice. Yeah. I compounded the error as it was going down. I bought more, thinking that hindsight being 2020, having 100,000 Russian soldiers outside the border of Ukraine should have been a telling sign, but I didn't obey it. And I just bought more as it was going down. Maybe that leads into this question. Looking back, what's one investment decision you wish you'd had to approach differently, Danny?
Well, gee, I wonder maybe not buying a bunch of Russian stocks at the start of the Russia-Ukraine war. Aside from that, though, I had always invested in the crypto market about a year before, or at the year of the halving cycle. But this year I just did it. I was looking at the Bitcoin chart. And if you look at a Bitcoin chart over since its inception, you'll notice it's essentially like this arc pattern.
Yeah.
But diminishing returns as you go up. And so I was thinking to myself, we may not even get another big run this year because Bitcoin is in unprecedented macro environments, right? It's in a rate hiking cycle, which never found itself in. No, are you pulling it up now?
Yeah.
It's just doing something like
Bitcoin. Yeah.
So if you do it log scale.
Oh, there we go.
Yeah, you see that arc pattern. It's so each subsequent spike is smaller than the last.
Yeah. Something like that.
No. Yeah. Mm-hmm. So I just didn't think it was worth the risk to put any money in. I should have definitely put money, some position in Bitcoin, precious metals, stocks, and commodities, adding into my commodity stocks.
Yeah. Yeah. Alrighty. Let's see. Oh, do you have any closing thoughts? Anything you want to leave our viewers with?
No, other than thank you for having me on. It's a pleasure talking to you, Steve, as always. And it's the markets nowadays. The reason why we talked a lot of politics at the start of this broadcast, and that's kind of like I've been kind of interested in more geopolitics on my podcast as well, is because these markets are inextricably linked now to the geopolitics. They're very politicized. So I just get the sense that you can't know you can't know the markets fully or comprehend them fully without having some sort of awareness as to what's going on in the Middle East, in Eastern Europe, potentially in the South China Sea, and everywhere else in the world. Everything is connected nowadays. You're in a fourth turning cycle, which means things a lot of things that we grew up with are going to be washed away, and it's creative destruction. A new system will come into place, so it's important to be aware of what's going on in that sense, not just have a myopic view on just the market. So that's what I'll say. Yeah, thanks again for having me on, Steve, and I'll stop rambling now.
It was a pleasure, Danny. I appreciate it. And we'll put links down to your YouTube channel down below. Anything else you want to plug?
No, just check out my YouTube channel. It's Capital Cosm. Just look at the description box down below. Also check out my Substack, capitalcosm.substack.com, where you get early access and ad-free versions of my interviews, as well as a chance to recommend me future guests down the line and ask questions to any and all my guests. So that's it.
Right on. Well, thank you, Danny. I appreciate it. And thank you for tuning in. Be sure to support the show and share this with anyone that you think needs to hear it. It's probably your buddy that can't stop talking about tech stocks. You have yourself a great rest of the day, and we will talk to you next time.
Oh, and really quick, comment down below, guys. Let us know what you think.
Yes.
And hit the bell notification too.
Yes.
Hit that.
And subscribe if you're not already.
Yeah, a little bit. I mean, it does go a long way, guys. So the algorithm marginal improvement to these kind of things actually elicits some pretty big outcomes on our end. So it'd be a huge service if you do that for Steve's channel.
Right on. Well, thank you guys, and thank you, Danny. You have a great rest of the day.